I wanted to, we'll be discussing about the Fibonacci strategies, okay? What is Fibonacci and how technical traders use these to determine their entry and exit points and different things, okay? Definitely one caveat to note is this alone cannot be used as a tool, but we'll be talking about it. So let's first go through this agenda. First, we'll talk about what is Fibonacci. Then we'll talk about what are Fibonacci retracements, and then Fibonacci projections, also called as extensions. And then finally, we'll talk about the Fibonacci time zones. Okay, so let's move on to the first slide. What is Fibonacci? A lot of you might be knowing what is a Fibonacci sequence, right? 0, 1, and if you add the last two numbers, you get the next number. So if you see the Fibonacci sequence, I just put it until 144, but it can go to the number. But the valid question will be, how is Fibonacci related to trading or to the technical levels? That's what we are talking about here, right? So in our thing, right, what the main, if you look at any Fibonacci, right, you will have these three levels that are there always: 23.6, 38.2, 61.8. And if you go further, they talk about something called as 161.8. How did they get these levels? Basically, what they do is any number, 61.8 is nothing but you get that number dividing consecutive numbers. For example, if you take 8 and 13, if you divide 8 by 13, it will be 0.618. If you divide 13 divided by 21, it will be 0.618. If you divide 21 by 34, it will be 0.618. Then if you take the next one, right, 38.2, if you take 8 divided by 21, it will be 0.382. Then again, 13 divided by 34, it will be 0.382. So, you know, two numbers, difference of two numbers. Similarly, 23.6 is three numbers. For example, you say 8 divided by 34, you'll get 23.6. So that is how those levels are defined. We'll see more in reality how these levels are being used in a real charts. But for right now, understand these are the levels that are very, very commonly used in retracements and projections when we talk about Fibonacci. Okay, so why use? I told it used in Fibonacci, but why do they use this? Exact reasons are unknown, but for a lot of people who have been in math or something, you might have heard about something called as a golden ratio. Golden ratio is nothing but it's a element, Greek element phi, which is equivalent to 1.618 or 0.618, the reverse number. Why is this so important? Because if you take about any construction of the buildings, they use this philosophy, they use this concept. If you also look at this, right, the 1.618 can be got by itself. If you do 1 plus 1 divided by 1.618, it will give you 1.618. And this is also used in the mathematics, in the math, if you use geometric segments and all those kind of things. So this, and also if you see a lot of for people who believe in astrology, also the Fibonacci numbers are, this golden ratio is a very important thing. And also, if you have been following some beehives, right, usually the female bees and the male bees, wherever they go, the ratio of the female bees to the male bees will be 1.618. The number of female bees will be more, so that will be 1.618. So this number has some philosophical significance, and that's why it is being used even in the stock market. But again, 1.618 is a very valid level. Along with it, we also use 23.6, 68 point, 38.2, 61.8 in the retracements. Okay. Okay, so let's move. Any questions so far? Okay, I'll assume that we can move to the next slide then. Somebody has, oh, admit. Why am I not? Oh. Okay, Fibonacci retracements. Fibonacci retracement. What are Fibonacci retracements? We'll be seeing in a moment. But understand that it will be drawn between a crest and a trough. What is a crest? A crest is considered something like a swing high, right? Like you can say, hey, it is at the peak, the swing high, and then the trough is something like a swing low, and you can draw it. And there are a lot of charting tools today available, like TC2000, TradingView, Thinkorswim. Everybody has this Fibonacci retracements. It's like a very common tool that is being used. So it will give you an idea about the levels the prices can reach. There are certain things. What I would highly recommend, don't use this alone as a tool for you to enter and exit, okay? There should be, like for example, you might be using something like time segmented volume or on balance volume, whatever it is, where you have a relationship between the prices and the volume, right? So that also could be a good indicator, and that if that matches, we can do. So let's go to the actual charts now to see how it looks. Let's take the Tesla itself, right? This is a very hot stock. I'm going to delete all the drawings here for a minute so that we have a clean chart. So if I take this is a crest, right? Because it is the all-time high, which is 502.49. Of course, this is after the split. And then we have if you draw a Fibonacci retracement from all-time high to this low, which is this low, this is something called as a retracement. What is a retracement? Retracement will tell you how deep it can go to the retracement. In our case, it gave up the whole thing and it went beyond this, right? So this is a retracement. Now it is trying to go up, and it is like hanging around. Sorry guys, my levels are a little bit different here, but it is same as 23.6. 25% is similar to 23.6. 37.5 is similar to 38.2, and 62.61.8. So it's a very similar. Basically, I use some Gann angles coordinates, so they are very similar to Fibonacci. But please do not get confused with this. So okay, it's still the same. So what is happening is here we are seeing it since it usually when it gives up this much, we tend to see it going to 87.5 retracement, which is 489, and then retrace back to 62.5 and then go back. Again, this is based on experience. There is no, again, as I said, there is no proven thing to say, hey, this is how it should work, but this is based on your interpretation after having worked for years. So this is called the Fibonacci retracement, guys, okay? Just wanted to bring this up. So when you draw the line, you get different levels and you do this, and that kind of a thing, okay? So far, any questions?
Didi, a question, please.
Sure, go ahead.
So the if it falls below the Fibonacci ratio or whatever is the three levels which you explained, and like in this case it actually fell below to 330. Once it does not hold true that Fibonacci ratio, is it still a good figure to be applied for a particular stock?
That's a very good question. So in this case, let's say it gave up everything and it went below the Fibonacci retracement, right? There are two ways you can think of it. Basically, this is not the line that it is looking for. Maybe you should extend it further and see here, right? The next low. See, now it is coming to the 23.6. See, what happens is, the reason why I'm saying is the swing high and the swing lows are something that we consider, right? Basically. But if you look at Tesla, this was a big gap up here, right? So when it had a big gap up, it went up to this point, right? 25%. And then it went to here. So now look at this. It came to this 23.6% retracement, and then it wants to go to this 473. That's what it looks like. And ultimately it wants to go to above this 530. But why I'm saying this is it doesn't lie. The charts never lie. It is all, think about it like this, guys. How do I say this? Let's say I present a movie to you. The movie can be interpreted in multiple ways, right? That doesn't mean that the movie is either wrong or bad. Or what I'm trying to tell you, the charts never lie. So in this case, the swing high and the low that I considered was too, for example, if you had taken this low, you can consider, oh, it went below this and it is coming back and it came here. But that is one way of interpreting it. Then
Srini,
the other way of interpreting it.
Hey, Srini, do you mind? I think Prasad's trying to join.
Yeah.
Okay. Prasad may be in the waiting room.
I don't see them. You see? Oh, admit. Yeah, I'm sorry. So the other way of interpreting it is, hey, I want to only see the 23.6 levels. So I go here and I draw this. So now you see it came to the 23.6 levels. Okay.
I think this is a very valid answer. So got it. So just to get to the level of understanding here, you started this chart from that top level, and that's where the Fibonacci ratios from.
Yes.
And then when you were
Retracements are always drawn from the top because it tells you how deep the retracement is.
And now, when you do the stretching of the graph there, what exactly are you doing here? Like by stretching, the ratios are extending to more, because earlier you showed us 25%. Now it is showing something like, again, 23.6, but the whole chart is more stretched out to a different scale. So how should we use or interpret that part there?
What do you mean by stretched out to a different scale?
Earlier, if you look at it from the top there, everything was when I commented that.
So from here to here, you mean? Let me
Yes,
understand what you're trying to say.
exactly what you did right now. From here to here, what made you stretch it is just you were trying to match the bottom where the stock started to make a rise from, and accordingly you were trying to retrofit to see what ratios. If that's 26, then what's the 87%, like that? That was the thought process.
Yes. Basically, what I'm trying to tell is the Fibonacci ratios always work. It depends upon from where to where you draw your swing high to swing lows, right? For example, if I go, see, each chart will be different. For example, if you, this is a daily chart, right? For example, now if I go to the same daily chart on a line chart, where would it land? It would end here, right? Because this is the swing low, right? Do you agree with me?
Understand.
So what I'm trying to tell you is it depends upon what chart you're looking for and what chart you're looking at and what time frame you're looking at. So everything will work according to that. So what I'm trying to tell is you got to be very clear in what chart you're looking at, and you should make decisions based on only on that time frame. Let's say you're looking on the weekly chart. I mean, unless you are a very advanced trader and you know how to relate the daily charts information to the weekly charts, and also the weekly charts information to the daily charts, right? Those kind of things. Then it's a different story. But if you are like starting off, I would highly recommend you to use a line chart so that it becomes much more clearer, so that it gives you a more deeper view of, like, there is no confusion here, right? Basically, some people even do weekly charts. For example, you go to the weekly charts, Tesla. If you go here, where would you draw this? Can you tell me? I'm sorry, who was that who was asking the questions? I'm sorry, I can't see the screen.
It was DK.
Hey, DK. So if you look at here, right, where would you draw that from that one?
I have no clue.
Yeah, exactly. So, okay. So let's say I draw from here to here, right? That way, this is my high of high, right? And then if I draw from here to here, it goes here, right? So now we are looking at something like 87.5% retracement here. Do you see that on the weekly chart? It became different.
Yeah, so usually speaking, I will normally follow candlestick, and I will follow the weekly. To me, more is what I normally use than the daily. But yeah, so generally speaking, for Fibonacci, do you tend to use more daily charts for that?
Yeah, I tend to use daily. It depends upon your time frame. Let's say you're talking about leap calls. Let's say you're talking about a year from now. If you look at daily charts, it won't make sense, right?
Yeah.
But if you are looking at, let's say, 2 weeks from now, then daily charts would make sense. If you are looking at an intraday trading, then even daily charts doesn't make sense, right?
Good.
You might want to switch to 4 hours, or you want to switch to 30 minutes chart, or even for 5-minute chart. It's up to you, right?
Yep.
It depends upon how much clarity you want, right? That's what it is.
Okay, got it. Thank you.
Make sense? Yeah. Okay, sounds good. Any other questions, guys? Okay, sounds good. Let's go back to our presentation. Where did I put this? 1 second, guys. I'm trying to see where I put that presentation, the PDF. Is it here? 1 second. Okay, here we are. So gives an idea about the levels. So we talked about the Fibonacci retracements. Now let's go to the next one, which is called Fibonacci projections or extensions. So what is the difference between retracement and extension? Retracements tells you how deep the retracement can be. Extensions will tell you where the stock can head after retracing back, after it comes back. So this is usually very, very useful for momentum stocks. For example, like Tesla, and recently like Run, solar stocks had a big run, right? And other than that, what do you call, like all the Penn, DKNG, which were running like crazy some days back. Now they are pulling back though. So all these it's usually useful for momentum stocks. Generally, so do not, again, as I mentioned, do not use them alone, but it will give you an idea where it is heading to. So let's take an example of a Fibonacci projection now and see how the same Tesla stock looks like, right? I just wanted to use Tesla. I mean, if there's any other stock that you want to use, like we can use it. That's not a problem. Okay, same thing. If I go to the extension, the same thing if I draw, right? In your charting tool, there'll be two tools, guys. One is I use the Fibonacci retracement. The other one is called the Fibonacci projection. If you take this, here, remember DK, you were asking me, I drew from the up, right, for retracement. But for extensions, you will draw from the down, right? So what will happen, it will be a three-way line. So what is happening is you're drawing from here to here, and then you would pull this one all the way to the retracement. Now, what is it telling me? It is telling me, hey, if at all the stock goes up, it can go to the 161.8 level, which is the next level above the 100%. That it crossed the 100% and it didn't touch the 161.8%, which is what is around the 519. So if you look at the retracements and the projections, they both are talking about the same levels, which is 520. So will the stock reach there? Let's wait and see this week. Okay, so that is how the projections are drawn. So extensions or projection, they also call it as extensions. Go ahead.
Question here, like here you drew it from the red color candlestick, which you drew it from, but
okay, if we take the other way,
yeah.
If we take the other way, it goes to the 550, 58, right? The greater you take, the greater it will go. So let's look at this one, right? So this is showing the 550 projection, which was what we were predicting sometime back in our group. So this is what it is heading to, I feel, 550. But will it or not is the question. It went below moving average 10 today. So we have to see, it has to come back behind it and then it has to go up, okay? That's what it is.
Understand. I'm actually liking what you're saying a lot. The only reason is one, that this is good educational. Secondly, coincidentally, I bought the October 30th call for Tesla.
Okay, cool.
For the earnings.
Yeah. I know that makes it, now it is more interesting, right? when you own it.
Happy and interesting.
Right. Okay. Actually, yeah. So this is how we do the projections. So far we talked about the retracement, the projections, right? So now all this is good, but how do we know when will it go? I mean, so far we talked about the price movements. Okay, the price is great, everything is good, but it can go to 550. But when? That will be the question, right? Let's say you bought October 30th call. Will it go in my time frame? That is the first question you want to see, right? Basically. So for that, again, sorry guys, I don't know how to get to this. Okay, sorry. Okay, so we talked about the projections or the extensions. The next one is called the time zones. While trading options, we have to consider two things, right? That is why options are considered risky. You are not only considering the options strike price, but you also have to consider the expiration date, right? When you want to buy it. So for that, you need to know what time frame do I need to consider? When do you think the stock will go up? So those are the kind of things we need to think about, right? So there is a tool called Fibonacci time zones. What it does is it uses the same concept of Fibonacci, but for the time. It is no way related to the price. So far, Fibonacci retracements are related to the price, but time zones are related to the time taken for the stock to reach a particular level. When it says a level, it doesn't tell anything that, oh, it is going to reach your level. What it tells is there could be a major reversal of, I mean, this is an assumption. I'm not saying it is going to happen. Sometimes it could be a minor reversal or a minor reversal. They say a reversal can happen at that time frame. So you should not use these time frames to say that this will happen. But you can use those as an indicator that when there is a good probability of it to happen. There's one thing we all need to understand. None of them can predict the exact times. These are all, most of you might be aware, trading is like at least short term. It's a probability game. And when you have to make sure that all odds are with you when you trade it. Okay, that's the whole point behind this. Okay, now let's look at Fibonacci time zones, how it looks. So the same example I took in, right? Now let's say this one. You look at this. So you see this? The first thing is 0, then it goes 1, 1, then 2, 3, 5, 8, 13. So the more the amount of time, the more the clarity, right? That's what it is. So right now it is at like it has completed almost 13 plus 8, 21, 26, 29, 31, 32, 33. So what is the next closest Fibonacci number, guys? 34, right? So we are looking at 34 in 4 days. So right now, if you look at this previous one, it has started going up. 1, 2, 3, 4, 5. Now what has happened, what is going to happen here is unknown. Like we have to see whether it will continue the trend or it will reverse the trend. Okay. So it is like we are looking at 1, 2, 3, 4, 5, 6, 7, 8, 9. So we are looking at 13 days. So 4 more days. That is coinciding with Tuesday, Wednesday, Thursday, end of this week. Okay. So we are looking at end of this week. By end of this week, we should have something going on here. For example, this week we played Chewy. I just wanted to bring this up so that, sorry guys, this is something I drew, but let me take this off.
So Didi, earlier, where did you start those timelines from? You began from the same, the earlier chart for Tesla? You began.
I started it from the lower point.
Understood.
Basically where it formed the lowest, after the swing, right? After it went up, it retraced, right? So that is like, for example, this is the, are you seeing my screen, DK? The 329.88.
Yes.
I started from here because this is where I'm concerned, right? Okay, where is it heading to? How long does it take and all those things. If you look at it, I am looking at my 100% is at 550 and I am right now at 435 and I'm looking at the next retracement level, which is at 472, right? So if you look at this, if I look at my retracements the same way, it is also going to the 472. You see that? 474. And the next one, if it goes at 25, is 534, right? That's what it is. So whether it is going to go, but it has taken a lot of, it has fallen for 5 days. It has taken around 34 days, basically. For me, it looks like more of an earnings play here, but let's see what happens, okay? That's what it is. So I wanted to give you another example, Chewy, that worked for us today. We were able to make a solid close to 100% profit on this today. But I just wanted to bring this up so that it could be an educational thing, how we made this. You see this? It formed a high on the previous thing, 8th day, right? And it started going up. So we brought it somewhere around here and it took off here. And the next day we sold it here when it went to 70. So it still has a lot of move up. Why? Because if you see the Fibonacci, if I draw from here to here, or according to you, if I draw from here to here, which is again a 25% retracement, 23.6, it can go to 72.13, which can reach maybe tomorrow or something like that. Okay.
Understand. Srini, that was a good pick, man.
Yeah, cool.
Chewy was a good pick.
Yeah. So I just wanted to bring that up. It's not about the thing, but anything. It's all about the charts never lie. We have to look at the right places at the right thing. Okay, that's what it is. So that's one thing. So other things are like, there are some few other tools in that there's a different ways you can represent Fibonacci arcs and fans. That is another way of looking at it. Let's look at the same thing. If you look at Tesla again, just wanted to bring that up. If you look at the Tesla, let's say you want to know how does this look. Let's say there's another tool called as an arc. If I draw this line, you see that this is the arc. So this tells me, for example, you can do your Fibonacci retracements. I'm sorry. Okay. If you see this, you can tell, hey, where is it coinciding? And that could be resistance. Okay. That's what we are talking about. If I edit this, I can put 100%, 161.8%, and all those things. So it is kind of telling me this is the way it looks like. But again, I don't use this extensively, but I just said that this is available. So what they say is, see, when they cross 100%, they go here, and then it is closer to this one. So it is like, those kind of things we can talk about. Okay, similarly, we have something called as fans.
A question here, earlier one, Eddie. When in the arc, does the inner circle have more meaning, more value than the outer circles as you expand?
Nothing like that. It is 23.6, 38.2, same levels, which we are talking about.
Okay.
So Fibonacci is nothing, it's all based on what you perceive of it. It always shows you the same levels. Only thing you can say is, for example, let's say this one, right? Let's talk about something like, let's take this example again because just wanted to show you how it will. You see this?
Yes.
This kind of tells you, hey, it crossed 23.6. Now, if you had bought it, let's say it bought here 38.2, then it went up, here it retraced. But the moment you cross this, it has gone up, right? So, I mean, the first three circles are going to be very, very close, right? That's what it is. So if you look here, the retracement levels are not coinciding. So you can say it hit the 37.5 here. So it's a little different, but if you are like, I drew the reverse one. Usually the way you draw is you don't take this and you do this. Look at this. This is how your charts will look. So this is the retracement, right? You went into retracement, it crossed this one, then it is going to go to this one, and then it goes this one. So this is one way of using it. Okay, yeah. Similarly, they have some fans. Same thing, it will tell you again the same thing. What it will tell you is, hey, this is the way it will go. This is again 23.6, 38.2. If you want more, you can add more levels to it. That's it. They don't have a big levels in this charting tool, but that's it. 23.6, 38.2. But to be honest with you guys, I don't use these fans and arcs. I just use retracements, extensions, and time zones. I just wanted to show you if these are also available if you want to use it. Okay, yeah. I think that's pretty much what I wanted to cover here today. So the final point, what I wanted to say is understand your support and resistances through the Fibonacci levels, and it will help you in the long run where it goes, right? This has been a very old tool that has been available in charting. Though people don't understand what the logic, why it is working, but most of them use it. So as in trading, right? It is like what most of the people are using. Two tools that most of the people use are Fibonacci, and the second one is the flat lines. These two are the most important tools that were used from the time there were traders on the market, right? Like people who traded on the floor, New York Stock Exchange or those kind of things. They used to use only these two tools. So there's a reason why it exists. So rather, I mean, we can question and find answers, but definitely it seems to be working. That's all I had, guys, today. Any questions?
Srini, since this is a short presentation, can you maybe do it on one more stock? It was kind of, but it's kind of large. Maybe one of the common stocks, maybe like Apple or any of those. If you can maybe kind of do the whole thing on kind of the projections, the retracement.
Sure, definitely, not a problem.
This
Who is
good
it, by the way?
And Didi, you know, probably if you can kind of again help us correlate how the price and the time part got built into that. You know, I love the time part because I always thought of Fibonacci ratios as the price element there, but the time element never really related. That's opening, you know, the eyes to a different world altogether there. So if you can also look at this, whatever stock you're looking at, if you can also put the time element to it.
Yeah. May I know who is this? We're talking. I'm sorry, I can't see who's talking.
DK. This is DK.
Yeah, DK. We definitely look at the time every time, basically. So let's look at Apple. So we can do a couple of examples as people said. I'm going to remove all these things. So let's say Apple, right? Look at the same example. I go here. So where is Apple? Anybody? I want it to be very interactive, guys. You guys can answer. Maybe whoever is it, tell this is me and just tell me so that I can know who is talking. Okay. Which level is Apple at now on the retracement? Anyone?
Would you say
Are you able to see my screen? Yeah. Okay.
Would you say 105?
No, 38.2, right? 37.5 is very close to 38.2, right? The one we talked about, 23.6, 38.2, 61.8, right?
Okay.
Sorry, Giri, I didn't really get it because I thought as of now, it's close to around that between 62 and 62.5 to 50, right? I mean, isn't it there?
No. See, I drew it depends, again, as I mentioned, if you had drawn here, let's say you went from here to here, right? This is the first one. It is way down, right? So remember, we always want to get to that level, 23.6, 31.2. Like, let's assume that we draw that way, okay? So it is at 38.2 right now. So if it is at 38.2, again, guys, what we have seen on experiences, it tends to go to 112.5%, which is like 143.5, 143, and it is 149. Now let's look at so this is on the retracement. Now let's look at the projection, how it looks. The projection,
Hey, can I talk for a bit? Actually, his question was, currently at today's closing point, it was close to, it was between 38.5 and 50, but we are considering
okay, got you. No, we are not looking at today's closing point. We are looking at the all-time low closing. Did I answer your question, DK?
Yeah, I think, you know, I'm getting that I was wrong in my understanding, but I'm still not found the right answer for my own sake, you know, meaning what you mentioned.
Sure. Look at this. See, let's say you're drawing this Fib retracement, right? Think about this, like when, we all need to understand that the future prices are determined by the current stock prices value, right? So there is a reason why Apple retraced the 37.5. That is, first let's get an understanding, right? For example, it came to an all-time low, which is 37.5. Now, from here, it has been going up. If you see here, it went from 103 to this guy, and it went above the cloud, and it is now coming. It might go to below the cloud and then come back. But what I'm saying is the all-time low is at 37.5% retracement. If I draw a Fib retracement,
just if you can explain this part here, when you say the all-time low, which is close to around 102, 105 there, you're saying it's 37.5.
Yes.
What you are looking at it from dropping from 87.5 to 26,
100%, right? That is, the top is the 100%, right?
Okay.
Always.
Okay.
This is 100%. This is 87. This is again, whatever you call it. This is
you are able to calculate it so quickly because you're looking at what comes up on your left-hand side once you click on it.
I didn't calculate anything, DK. Either it's showing up, right? This lines here, 37.5. Do you see that?
Okay.
I didn't. In your charting tool, it will always show up, right? Fib retracements. I didn't do anything.
You are looking at the closing price there, or you're looking because the entire candle is quite beyond even.
Okay, even if you take the entire candle, it didn't touch the 25, right?
Okay.
Right? It didn't touch the 25. It just touched the 37.5, right?
Understood.
Okay,
Understood.
so if you took it, or if you take this, right, it went from here to here, right? Now let's look at the Fibonacci projections where it can go, right? Again, when I meant projections, I'm talking about the first value higher than what it reached. Okay, let's see. I'm going to draw a projection now and see. We'll do all the three and see where it goes. So the same thing, I'm sorry. The same thing I draw here to here, and I go here. What do you see? Where do you think it has a possibility of going? What is the first level above the 100%? How much is that? I mean, whatever this is 100 means, it is going to the 100% retracement.
The same thing as what was there earlier.
152, around the same range, right? 145, 152, right? Now, so same thing. Now let's look at time. How much time does it have? October 29th is its earnings, guys. So look at this. So basically, it is finished this one, and it has got, excuse me. Sorry, guys. So it is like going down here. So even tomorrow, it might be ending up going down. The trend will be the same unless there is a big reversal. If there is a reversal and it crosses the cloud, when would it go? The next time frame, ideally what you should do is, if you're buying this option, you should buy 13 days away from this. That means you're talking about at least 3 weeks from now. Make sense? Because after 8, what does it come? 13, right? Guys, on the time zone.
Yeah.
You have 8, then you have 13, right? After that. So you want to take that whole time period to let the move happen, right?
So isn't it 5 days from now?
No. Why is it 5 days?
From 8 to 13, it is 5 days, right?
No. 13 days. Okay. If you look at the whole time frame, right? It is say 1, 2. The difference is 1. 3 to 1. 5 to 3, 2. Then 5, and here the 8 days. It is not like difference. It is 5 days. It is not the difference. The difference is the number in Fibonacci, but the number of days is actually counted. 1, 2, 3, 4, 5. You see that? Then here 1, 2, 3, 4, 5, 6, 7, 8. So the next one you have to, that will be 13 days. So 1, 2, 3, 4, 5. You have to have 13 days available for your move to happen, right? Did I answer your question? Whoever it is asking?
Yeah, okay, correct.
Okay. It's not
Srini,
5
that
days,
is
13 days.
Srini, just to be clear, the time zone that you showed is also using the Fibonacci sequence, right?
Mm-hmm.
That's why at 5 plus 8 is 13, so it needs 13 more days.
I mean, I would give 13 more days. It may, whether it is,
Yeah.
if I'm playing an option, I want to be safe, seeing that, okay, what is going, because, for example, right, let me talk about another stock which we have right now, DKNG. Look at DKNG. Basically, we brought November 20 DKNG 45 calls, but what is going on here, it started today. So how much can it go is the question, right? That is what it is. So we gave a lot more time. We gave more than 8, 13 plus 13, 21 days time. That's what it is sometimes. I'm sorry, somebody's phone or something? Okay, so let's go back to Apple. Any questions, guys, so far? You want to do on any other chart or something, or you want to do on this?
Srini, can you explain the cloud? What does that cloud mean, that other charts you have there?
I'm sorry, what do you want me to explain?
Ichimoku cloud.
Cloud.
That we have it for the next class, guys. It will take a longer time to do it now.
Raghu, that's a pretty good strategy. And I think that Ichimoku cloud.
One minute. I'll stop the share if you don't have any questions on this anymore. 1 minute, Diva.
All right. Can you hold on 1 second?
Sure.
On this one, right? So, okay, you have the Fibonacci retracement and you have the time zones. Now, so in this current graph, are we looking at the next price level to be 150?
Yes. Basically, for projections, it is showing the next one is 150, right? Basically.
Okay. All right.
This is purely based on Fibonacci, right? Again, we have to see, for example, I look at whether the volumes are getting higher, those kind of things. You want to see there is a lot of momentum going on, those kind of things, right? Money stream, everything. So, but for right now, purely based on the Fibonacci projections, we are talking about 150, 154, right? That's what it shows.
And the, just to be consistent, right? So the way, once you have the projection, the time zone would start from the
lowest.
From the last which you use the projection from, right?
The last, yes, right. That's right.
Okay.
So Srini, on the projection, it's showing it will hit on the 8th interval, right? Like whatever that 8 you have there, right? But that, but that doesn't look realistic, though, right? It's, I mean, you know that we're not going to hit within the 8 time frame there.
No, what he was saying is 8th is shown here, but the next Fibonacci ratio is at 13th. So the next move is going to happen at 8th, up or down, but a move is going to happen. And then the next move is going to happen at 13 days. I think that's what I understood, but please.
Yeah, what I'm trying to tell is, again, this is all a problem.
No, my question is, Srini, in this case, the projection doesn't mean anything here, right? It didn't even hit the projection at all.
No. The projection, okay. Projection and time zones are totally, as I mentioned, right? Time zones are not related to price. Projections are related to the price, and it doesn't have anything to do with the time. That's what I said. Now, there is now how do you relate these two things? There is another tool called as GAN pans, GAN angles. That is another topic that we are going to cover very soon. But basically, this projections and Fibonacci, the time zones, right? For example, right? Let's say you want to, you came into the stock. You said, okay, today it is at 115.66, and my projection is showing that it can go to 151. So what is the best move you could do? You know that you have only 1 day here left, and it's not going to happen that big move, right? Even if you take ATR for the week, ATR is a measure of the volatility of the stock. So if you take the ATR is around $10. So if you go to $10 for this one, even if you take from here, hey, if it makes 115.66 plus $10, 125.66, it's not going to reach my destination. So what is my next best bet? The next best bet is, okay, after 8 will come the 13 days time period. So there's a possibility that you can go with the ATR of 10. What is the ATR daily? ATR daily is 373. So if you take even every day it moves $10, $3, so that is $30. So that's a possibility that it can go there, right? That is what I'm saying. Again, guys, it's all a probability game. I'm not saying nobody has a crystal ball telling that this is going to go.
No, I think you answered the question that there is no direct correlation between projections and the time series that you're
there is no correlation. It is two different things which are telling you. Again, you don't even need these time zones if you know your Fibonacci numbers, right?
Yeah.
Right? If you know it in, like, for example, I never used to draw this because I know in my head that, hey, okay, it has to be, next one is 34, next one is 55. I mean, once you get used to it, you will know in your hand. But it's just a way of telling. But the one good thing about this time zones is you can reach a major low or a major high or something from where you are looking for reversals on those time zones. That's a possibility. Again, I'm not guaranteeing. There's a possibility that it can happen, so which could be a good entry point for you. You know what I mean? That's what I think. Does that make sense, Raghu?
Yes, it does. Thank you.
Yeah.
So my question is, tomorrow being 21 days, so 22nd day may be a good entry. right? For
Again,
Apple.
you have to look at your candlesticks, whatever, how the candlesticks are behaving. Let's say if it is still falling down, in this case, it might even still fall down, right? Because it is trying to go below the cloud and then come back. So it might fall down and then it might come back, right? So again, it's like what I'm trying to tell is, yes, that is the levels that you can watch for, but you also have to look at other indicators to tell you, is it the right price to enter? That's all I'm trying to say. Does that make sense?
Yeah.
Srinivas, can I ask a clarification question? So right now, where the candle is, looks like it's going down. So is it accurate to say that, if we were following this, then we were expecting that it will go up to 23.6, but if it crosses that level, then tomorrow, then it could actually fall down further, right? So that's I don't see a next level down there, but if there was a next level, if there was a next line below that, then once it crosses one level, then the next would be the next one after that, right?
Yes, yes, that's exactly. It's like any other thing, right? It's like breakouts or breakdowns, right? If it breakdowns, then yes, you go further down the line, right?
Right.
For example.
So if it starts going up tomorrow,
yeah,
if
it
crosses the
yeah, then you want to wait for it to cross the cloud, right, Sneha? And then go for it, right? That's
yes. Yeah. Let's see.
Sorry, I was interrupting a lot, Sneha. Anything that I took away your thought or something?
So they'll come back to me. I'll ask again later.
Yeah. So can I stop this recording, guys? Any other questions you have? Anybody else? Sandal, anybody, please feel free to ask.
Oh, one more question. Sorry.
Sure.
You mentioned ATR. So when you look at the thing, you said ATR was 10, and then you said it is 3 point something. So you mentioned two things. So I was like, which one? I thought ATR was 10 probably.
Sure. If you look at ATR, right? ATR generally gives a measure of how much the stock moves in a week. Usually I take the ATR per week. If you look at here, it went to 125.39, the high, right? Now look at this, 125.39 and the ATR is $10. So basically it came down to 115. You see that? The ATR? From 125.39, it fell down to 115.66, which is very close to almost the $10 ATR that it had, right? It might go even further down tomorrow. Did I answer your question, Sneha? So ATR is a very useful tool.
Right. So that is $10, right? So $10. So the average range is $10. So now, if you have 13 days, that can go up or down by $130 in theory.
Yes, always it moves in the terms of ATR, basically. It might get as close to it, or it it may not be accurate, but it will move as much as close to that ATR in the move. And that move can sometimes go this week a little bit, and the next week beginning it will go a little bit, those kind of things, right? Always it's good to have like a couple of weeks into the belt, right? For example, if you see here, even look at this Apple. From 103, it took $10. It went here, 112.86. So where did it finish on that week? It finished on 112, so close to $10, right? Then the next day, it went again, it didn't go all the way. You see that? 117.72. But from 117.72, it went to a low of 112. So sometimes it will take a weeks to get that thing sometimes, but it's a good estimation of how much it moves totally per that week. If you look in this week, it went from 112 to 117, and then again it finished at 112. So it went $5 up and $5 down. You see that?
Yes.
So here also the same thing, 112 again it picked up and then it went to 117, those kind of things. So it keeps on moving like that, but ATR will tell you how much is the volatility of the stock for that week. That's what. Again, these are all not accurate, but if you combine 3 or 4 indicators that you like to work with, then you will get a much more better picture. So that is where the systems are developed, right? That's what it is. Any other questions, guys?
This is very good.
Okay, cool.